And today marks the first full trading week of 2015, and with what we know of markets and how they behaved in 2014, can we predict what might be in store this year? Well, in 2014, a measure of most Asian stocks showed a gain of 0.7%. Chinese stocks by far led gains in the region, with the Shanghai Composite Index soaring 53%. And commodity companies posted the largest decline, sliding 2.5% last year. So how will forecasts of a slowing Chinese economy, higher interest rates in the US and continuing falls in oil prices affect how investors will behave this year? Well, for more, I'm joined by Peter Churchhouse from Hong Kong. Welcome to the program. Now tell us, Peter, how do you see regional markets faring this year, and how might the projected slowdown in China affect them?
Well, last year was a very mixed year of performance and domestic indices around Asia. As you mentioned, China and India were very, very strong performers, but the developed markets of Hong Kong, Singapore, Taiwan and Korea were pretty ordinary performances. I'm expecting that we're going to see government policy will dictate or drive market performance in the first part of this year, particularly in China and Japan. Certainly in China, we're going to see, I think, further monetary easing and fiscal stimulus in a very much targeted way, more so than we've seen in the past. So I think that will continue to drive the China market quite strongly in the first half.
Now you talk about
reasonably optimistic on China.
Government policy driving the markets, Peter, but what's really interesting is we've seen these huge rises in the Shanghai Composite, and yet China's economy in the last quarter showed its slowest pace of growth in almost a quarter of a century. So what is driving the markets there, if not the economy?
Well, the Chinese market is very retail driven. About 80 to 85% of the market is retail. And let's face it, the Chinese retail investors are very much gamblers. That's reflected in, of course, in the amount of money spent in Macau and the gambling tables. So I think the retail investor drives it rather than the institutional investor. And what's driving the retail investor right now is there are very few other alternatives to park your money. The real estate market is very soft right now. Prices have been trending down for about 9 or 10 months steadily. There's very few other places you can park your money. They can't take their money offshore. They have to keep it onshore. So that, I think, has been a big factor behind the very, very sharp rise in the domestic shares in the Asia market. The China shares in Hong Kong haven't really done much at all. But it's the domestic market that's really performed.
I'm going to have to cut in there, but thank you so much for joining us there, Peter Churchhouse from the Churchhouse Letter. And that's it for this edition of Asia Business Report. Thanks for watching.